Andreas, let me first ask you about the situation in Europe. I mean, we have such strong growth numbers coming out of at least the core. Germany had 0.8% GDP growth in the last quarter. And we have banks that are suffering from this low interest rate environment. Isn't it time for the ECB to pull back on this extraordinary stimulus and start to normalize rates?
Well, I'm standing here as the chief German bank supervisor. So from a bank supervisory perspective, you're very right. We're seeing lots of damages of this low interest rate environment. But from a monetary policy point of view, you have to think about other things. So there are conflicting messages we have to send. But I'm the bank supervisor, and a persistently long low interest rate is a problem. I can say that. But maybe there comes the time when monetary policy is reacting to this and to changes in the economy, because the economy is strong. 0.8% in Germany in the third quarter, 0.6% in the second, 0.7% in the fourth. So eventually price pressures will pick up.
What about, I mean, look, we're seeing coalition talks have difficulty right now here in Berlin. One of the problems is discord over sharing financial risks in the euro area. As the bank supervisor, how do you see financial integration going forward? How do you see banking union working out without a European deposit insurance scheme?
Now, first of all, I don't see any political risk coming from Germany from these coalition negotiations. The banking union is very well on its way. Don't forget, it took us a very, very, very short time period to install a harmonized bank supervision. We were very quick in installing a single resolution board, and we do have quite some harmonization with regard to deposit insurance. It's 100,000 euros per client, per bank. It's not that we are not harmonized. What we don't have is we don't have a European deposit insurance scheme, but we still have national deposit insurance schemes. We still don't have that sort of integration. We would need to go that step, but eventually we will do once we are ready. But we need to harmonize also economic policies before we go there. Look at insolvency laws, for example. In some European member states, it takes like half a year to foreclose on a mortgage. In some, it takes more than 10 years. So at the end of the day, once you have this economic integration, we will also have a common deposit insurance scheme. But it's not as if we wouldn't have any harmonization. So the banking union is well on its way, and it's making progress, and it's working rather well.
Dr. Dombret, Guy Johnson in London, good morning. Would you have any problems with Deutsche Bank and Commerzbank merging?
I never comment on single institutions. That's for the banks to decide themselves, and whoever wants to merge will then have to apply with the ECB and with us, and then we talk. I never make any comments on individual institutions whatsoever.
We'll look forward to maybe having this conversation in the future then, when we get some news, positive or negative. Dr. Dombret, can I ask you a question that is very relevant for many of those sitting here in London with me? When are we going to get clarity on which functions at banks can remain in London and which functions need to move to the EU post-Brexit? When are we going to get clarity on that?
I wish I would know that. We are still in phase one of the Brexit negotiations, and it's not at all clear whether or not, as originally envisaged, we will go to step 2 or phase 2 in December. So we have to wait for that, and it is my impression that negotiations are going rather slowly, and it's going to take some time until we will have clarity. This is why we have asked the banks to take precautionary measures, not knowing what the outcome is, deciding under uncertainty and preparing for a hard Brexit. That doesn't mean we're wishing for a hard Brexit, but that is at least a scenario you have to be prepared for.
Yep. Can I get your thoughts on what is being considered at the moment in a number of American institutions, we understand, which is the branch back option, which is effectively the exact opposite of what we've got now. Would that be too far from your point of view?
It is not exactly my point of view, but I also, again, don't comment on individual banks, and you are asking a broad question. We would have to look at the concrete proposals rather than giving a broad-based answer. We are, with some banks, in very concrete discussions about what their model will be, and we look at their applications, and that's the place to discuss it. But we have to make sure, should functions be transferred to the continent in Europe, regardless of whether this is Amsterdam, Paris, Dublin or Frankfurt, it's clear that we're not going to accept any letterboxes or empty shells, that we will have a real bank business here, which means we have the management here, we have the compliance function here, the money laundering function, the risk function, we have quite some IT functions. We have to have a bank, the banks have to be able to operate outside of that city, and there will be no deviations from that. Everybody can open a letterbox in Germany, but you don't get a license for that. So if you want a license, and that's what these applying banks want, they have to apply with the rules.
Do you see, by the way, the Frankfurt infrastructure as ready to accept the influx of bankers that city may see? I mean, we hear a lot of complaints that maybe normally wouldn't concern a banking supervisor, but in order to move such large amounts of staff there, you've got to have a school system, and you've got to have places for them all to live. Is Frankfurt ready for this?
You know, I'm not advertising Frankfurt over any other city on the continent. All I know is that we have 31 international schools in Frankfurt and around Frankfurt, and will there be a bottleneck? I'm sure there will be a bottleneck, depending on how quickly and how many people come. But that doesn't mean that when those ladies and gentlemen should ever move, that those schools wouldn't be ready by then. I don't think that any city would have those systems right now in place if there would be a change. And as you asked yourself in your question, we don't really know how many jobs and functions actually will be transferred, so we have to have some flexibility. And it's unfortunate that we have so little clarity at this point in time, as negotiations are moving rather slowly.
Let me move on to ask about Basel. I feel like I'm starting to feel like we're talking about the Berlin airport here when I ask how close we are to finishing the Basel regulations. Where do you think we are right now, and what's holding us back?
Well, first of all, we are technically ready. A compromise is on the table, and it's now for the governors to decide on that compromise. All I would like to say is that the reputation of Basel is much better than, the actual compromise is better than the reputation. That's the way I wanted to phrase it. Again, technically we are ready to move, and now we have to have the final clearance. And one thing is very clear: Basel III is a package. It is not only the calibration of the output floor, which is so often discussed, it's also rules on the trading book and everything else. And we should not have another déjà vu, but we have to have a situation that all parts of what has been decided in Basel then actually are also implemented. And so this is a package, and we're looking at the package, but we're doing this in good faith.
Dr. Dombret, can I turn our attention a little further south to the home of Mario Draghi, Italy? The ECB is going to be tougher on new NPLs, i.e. those that are coming up, but there's this kind of massive overhang of old NPLs. How carefully do you think that regulators are going to have to tread in dealing with these institutions that hold the NPLs? In as much as A, we've got politics as a factor, and B, we've got an economy that, while strengthening, still remains fragile?
Now, I sit on the supervisory board of the European Central Bank, so I am in that group, and I was part of the negotiation and part of the decision, I should rather say. Now, what happened is the following. As you said, we agreed on how we want to how we suggest to deal with non-performing loans which are coming up. This is now out for consultation. We're discussing this with the industry, and we have publicly announced, and I can reconfirm that by the end of the first quarter of next year, we will publish our ideas on the NPL stock, which is really at the core of things. Now, obviously, you have to be cautious and you have to be respectful of the situation. On the other hand, we all know once you clear the deck, you have the opportunity of doing new business, and once the deck has not been cleared, this is holding you back, which also has negative implications on the growth of an economy. So at the end of the day, it's in everybody's interest to tackle this in a responsible way. So these are negotiations we are having. Then there will be some guidance from the European Central Bank and the national central banks like the Bundesbank. And at the end of the day, the EU Commission then has to put this into their wording and into their writing, but you can expect guidance on the non-performing loan stock by the end of the first quarter of next year.
Can I just ask Dr. Dombret one last quick question relating back to Brexit, so we can just spin back a little bit to that subject. You've addressed a number of issues, and we're trying to understand kind of how ultimately the structure of the story is going to look like, which sort of jobs are going to go where, and how the balance sheet is going to be fragmented. What kind of grace period will you allow institutions as we work our way through this process? Because Matt's question about kind of there being enough school places is as relevant as anything else here. Would you be allowing a pretty significant grace period to allow banks to deal with the new scenario?
Depending on what you think is a significant grace period, we have been discussing that with those banks. We are interested in a smooth transition, that things work out. We're not interested at all in cliff effects or into this project running against the wall. So we will be very responsible about grace periods.